Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Hello, a warm welcome. Thanks so much for joining us on Kalkine TV. My name's Sage. We've got the ASX buzzing stocks for the day for you. The Australian share market opened at a positive note. November 17th on 10:16am Sydney time, and the S&P ASX 200 was up, gaining 0.15%. ASX All Ordinaries was also up, gaining 0.11%. On the other hand, the volatility index, the AVIX, was sharply lower today, dropping 6.34% to 14.55. In today's opening trading session, the gainers were biotechnology company Imugene, up by 2.63%, and multinational insurance company Insurance Australia Group, up by 1.68%. On the other hand, the decliners were Alumina, down by 2.53%, and metallurgical coal producer Coronado Global, down by 2.36%. As of 10:31am Sydney time, sectors were mixed. 8 of 11 sectors were lower, along with the S&P ASX 200 index. Industrials is the best performing sector, gaining 0.10%. Taking a look at the announcements for the day on the ASX. SEEK today, in its 2022 annual general meeting, including trading and 2023 financial year guidance, said that it is on track to deliver 2023 financial year guidance for revenue, EBITDA and NPAT for continuing operations. The company expects revenue to be in the range of $1.25 billion to $1.3 billion Australian, while EBITDA in the range of 560 to 590 million Australian dollars. A net profit after tax in the range of 250 to 270 million Australian dollars. ANZ, that's Australia New Zealand, job ad volumes continue moderating slightly, in line with a small increase in the forecast unemployment rate, some offsetting yield improvement from dynamic pricing and lower discounts, while SEEK Asia is continuing in line with the current revenue trajectory. Employment, one of the major factors of inflation and which way the RBA goes with their rate increases. ASX will reassess all aspects of the CHESS replacement project and derecognise capitalised software of $245 to $255 million pre-tax in 1H23, or the first half of financial year 23, and current activities on the project have been paused while ASX revisits the solution design. ASX Chairman Damien Roach said the ASX began this project with the latest information available at that time, determined to deliver the Australian market a post-trade solution that balanced innovation and state-of-the-art technology with safety and reliability. However, after further review, including consideration of the findings in the independent report, ASX has concluded that the path it was on will not meet ASX's and the market's high standards. There are significant technology, governance and delivery challenges that must be addressed. And on behalf of the ASX, Roche apologised for the disruption experienced in relation to the CHESS replacement project over a number of years. On to Perpetual and Pendal Group. They will increase the scrip component to 1 Perpetual share for every 7 Pendal shares and reduce the cash component to $1.65 per Pendal share. The cash consideration of $1.65 per share will be reduced by the 3.5 cent per share financial year 22 final dividend payable on 15th December 2022. Its implied value of $6.161 is broadly the same as the previous one. Pendal Chairman Deborah Page said the Pendal Board continues to unanimously recommend Pendal shareholders vote in favour of the scheme in the absence of a superior proposal. The Supreme Court of New South Wales reserved its decision, which is expected to clarify a penalty where Perpetual breaches the scheme implementation deed. The decision is expected today, Thursday, 17th November 2022. We'll keep you updated on that as things come through. Thanks so much for your company on this report. But that is all for this edition of the ASX Buzzing Stocks for the day. Many more ASX announcements will be coming out from their website directly, and you can catch up on this one, in particular, on Kalkine Media's YouTube channel as well soon. Thanks so much for joining us. Have a great day in trading. Sage signing off.